Okay, all things that will be considered by the central bank for sure. Of course, we're watching bond yields very closely, too. We saw the 10-year hit the 3% level. Let's bring in Yahoo Finance Julie Hyman, who's tracking the very latest.
Yeah, I wanted to take a look not just at bond yields, but what we've seen across the markets as we've had this sort of change in perception over the past month or so, and the market coming to terms with the Fed continuing to raise rates and perhaps raising by bigger increments at one time. So here's a look at the 10-year note, and indeed we saw it hit that 3% threshold and then back off a little bit right now at 2.92%. So it did not stay at 3%. We did not see a sustained move in that direction. But again, what I'm talking about in terms of the moves that we have seen over the past month, right? We have seen this real decline really across the averages. And whereas initially earlier in the year, a lot of the selling was concentrated within large cap technology, that's not really any longer the case. We have seen it really broaden out and a more broad-based concern, not just about the effect of higher rates, right? And here's the look at the NASDAQ composite over the past month and the drop that it had, of course, the big drop in April. Not just the effect of higher rates on all these companies, but is there going to be slowing economic growth? How much is economic growth going to slow? And then in turn, what effect is that going to have on all of these various groups? So wanted to look at those groups and at the, it hasn't been indiscriminate selling. That maybe is overstating it. But over the past month, this is a look at the sectors within the S&P 500. Communication services and the XLK, the tech sector ETF, were some of the worst performers. But they're not the only ones. Consumer discretionary, financials, which, as we talked earlier about with you, Brian, you would think they'd be doing well when rates are going up. That hasn't been the case. We have seen a big downturn there. Industrials, real estate. So it's been this pretty broad selling here on this concern about not just rising rates, but what we are learning and feeling and forecasting about the underlying economy, guys.
Yeah, certainly. And there's kind of been this question, and perhaps some of the questions will be answered in tomorrow's Fed meeting about when we're going to see the bottom. I don't know if there was anything that you had seen in the commentary or even in the technicals to tell you, have we hit that point yet?
There's certainly not consensus on any kind of reaching a bottom in the markets, right? We have seen some folks like Michael Wilson over at Morgan Stanley come out and say he thinks that we are going to see another leg downward in these markets. You have other strategists coming out and saying even if we do get a recession out in 2023, doesn't necessarily mean that stocks are going to underperform. So there's a lot of debate about these issues right now and what we're going to see in stocks in the short term.
Bears and bulls, always at it.